have an earn-in partner, Oz Minerals, who are currently at 51% and are earning in up to 70%. Oz Minerals are an ASX 100 company, market cap of about $3 billion with sort of cash at bank of about $600 million and no debt. So a very strong financial partner, but also a strong technical partner as they operate a reasonably large copper gold mine in South Australia and have another project under construction. So an excellent partner. It's a project that really has a lot of potential. There's some development assets within the project area which are currently part of a pre-feasibility study, but there's also some significant exploration opportunity that is being realised through funding that comes via the joint venture. We also have some other greenfield or early stage exploration projects, all in Western Australia. So Mount Squires is a gold project that's had a little bit of drilling showing some gold mineralisation. We've got a sedimentary zinc target, once again reasonably remote in Western Australia, but that's where these large scale opportunities exist. And we have another nickel, copper, cobalt sort of sulphide project that Cassini is earning into quite close to Perth. So where we're at, we're rapidly progressing the PFS on the Nebo-Babel project with our joint venture partner. It's one of the few globally significant or projects of scale, sulphide projects of scale. There are probably 3 projects globally that are producing or plan to produce greater than 20,000 tonnes of nickel at PFS or greater. 2 of those are in Africa and are actually having some challenges around their tenure. And the other one is in Canada. So there are very few of these types of projects, and I think we've heard today with the forecast demand for Class 1 nickel, of which the nickel sulphide is, we see that it's a great opportunity to progress this project, as does our partner. And even though the base metal market, we've heard it has been sort of knocked around a little bit in recent times, the fundamentals are very strong. The medium to longer term outlook for nickel is strong. The stockpiles are coming down. Stainless steel market is still a big consumer of nickel, and the nickel market is currently in deficit. And anything that can be added on top of that through the EV and renewable thematic is only sort of positive. So as I said recently, placed about $4 million to strategic investors. That cash gets us well through the pre-feasibility study. As a company, we don't have a lot of cash requirement. We probably burn about $1.5 million a year because a lot of our costs are met by our joint venture partner, and a lot of our technical team are working on that project, which subsidises our costs and keeps our cash burn quite low. And that really is a key driver for us. We've got a couple of very clear value milestones ahead over the next sort of 4 to 6 months, and the aim is to keep our capital structure tight, keep our dilution to a minimum, and really look after our existing shareholders. So at a project level, Oz Minerals have just earned their first equity, so they've spent $22 million to earn 51% of the project. That occurred 8 months earlier than was required, which gives you some level of indication about their sentiment towards the project and their intent. We've had a really successful field season that will wrap up in the next few weeks. So we've had some great work. We've done about a 65,000 metre resource infill program, and some of that program was brought forward from the feasibility stage. We've had some significant wins in the metallurgical recoveries and also the exploration drilling that really is shaping up for us to deliver a great pre-feasibility study in March next year. That's the project area. So it's about 1,500 square kilometres in Western Australia. The project was originally discovered by Western Mining back in 2000, and then that rolled into BHP. In about 2013, BHP made the decision to get out of nickel, and this project sat outside their BHP Nickel West business, so it was able to be divested. BHP and Western Mining probably spent north of $150 million on the project. Cassini picked it up for $250,000 plus a 2% royalty, plus a one-off $10 million payment once we've had 12 months of production. So it was a fairly sharp deal for us. We had some capability in this area because we're doing some exploration work. It's a great project. There are currently 3 deposits within this project area. It's about a 1,500 square kilometre tenement package. These 2 deposits, the Nebo and Babel deposits, are about 1 kilometre apart. They're nickel and copper sulphide deposits. shallow mineralisation, so close to surface. The current resource is 283 million tonnes, grading at about 0.5 nickel, 0.545 copper, and we also have some other elements in there that we will get byproduct credits for in cobalt, palladium and gold. Apart from those two deposits that are the focus of the development study, we also have another copper deposit that's about 15 kilometres up to Sukkot. Currently that's at the inferred stage. It's 156 million tonnes at about 0.6 copper, with once again some PGE or platinum and palladium credits. The exploration target on that is significantly bigger than the 156 million tonnes, and that's the subject to some drilling. But we see that there's already 3 delineated deposits. There's opportunities to delineate other areas of mineralisation. So this whole belt that we've identified is about 40 kilometres of sort of mafic intrusive and copper and nickel mineralisation. We've done some work on some exploration targets, One Tree Hill and Yapsu, which I'll talk you through how we've gone. Cassini did a scoping study in the first stage of the joint venture. This will be updated obviously in Q2 next year, but just to give you some idea of the scope of the project, the real reason for getting the funding partner in was the project is just too big for Cassini. It really is a sort of a mid-tier or a majors project. So the current resource is obviously over 1 million tonnes of contained nickel and copper. The production scenario that we ran a number of scenarios up to 10 million tonnes per annum, and that provided the maximum MPV. Producing 20 to 25,000 tonnes of nickel in a nickel concentrate, 30 to 35,000 tonnes of copper in a copper concentrate, about 700 to 1,000 tonnes of cobalt, which actually reports to the nickel concentrate that from the work we had done from the marketing we'll get paid for. We've got a mine life here of 8 years, and that was really a function of where the resource was at. So part of the work that we've done in this pre-feasibility study is convert a lot of that inferred resource into indicated, and we're very confident that the next iteration or the PFS will have a 15+ year initial mine life with plenty of visibility over increasing that by another 10 or 20 years. So we really see this is a multi-decade mining opportunity. Sits in the right spot in terms of cash cost. So this was some work that was done independently by Wood Mackenzie. You really want to be in that sort of bottom third. This put us in about the sort of 30th percentile, and a lot of that bottom quartile is actually dominated by Norilsk with a negative C1 cash cost with all their byproduct credits. We believe with a long mine life and also a low C1 cash cost, that positions the project well to make the most of some peaks and troughs, I guess, in the nickel commodity cycle. Most of you are probably aware it's quite a volatile commodity, and where you want to be is when the prices are low, you want to make sure you have that resilience of being at the right end of the C1 cash cost curve. The capital for developing it is about $800 million. Once again, that will be, we don't see that will move too much in the PFS. Cassini's share of that is about $250 million, and really that's one of the key opportunities or challenges for us coming forwards, and I'll talk to you a little bit about how we solve that funding issue. Oz Minerals obviously are up for 70% of that funding, so we only have to worry about 30% of it. And the payback is quite rapid. So there's some characteristics around this deposit where some of the high grade sits on top. The metal production is very high in the first 5 years, and that really does lend itself to a rapid payback and reducing the risk around the project. That's just a shot of the exploration camp. We've had 50 people on site most of the year with 6 drill rigs, doing a resource drill out, a metallurgy sort of sample collection drill out, some water drilling, and all the environmental. So it's been a busy time out in the project area. We've also been running a range of other work programs around sort of renewable energy study, all the environmental approvals that have been running. So as I said, the PFS is on this subset of the project called Nebo Babel. And we see that's the first key of getting this project up and running, and there's a lot of opportunity to add to the value of this project by bringing online some of these other mineralised areas. These are the 2 deposits. I'm not sure many of you have made it to the Melbourne Cricket Ground, a very famous sporting ground in Australia. Seats 100,000 people. But just to give you some idea of the scale, so these deposits are big, broad, shallow zones of mineralisation, so that's 2 kilometres by 1.2. Most of the resources in Babel, about 240 million tonnes, and importantly, it's very sensitive to the cut-off grade. Currently, the resource cut-off grade is 0.25% nickel, and it's about 240 million tonnes at Babel. If we drop that resource grade cut-off to 0.2, we add about another 100 million tonnes in Babel. So that has some significant implications when I talk you through some of the results we've had in the metallurgy, that a lot of the material that we currently thought would be uneconomical really does stand a very good chance of becoming economical. We've had some good wins with the Babel resource, and I think this is just to point out that there's still opportunities to extend this resource. As I said, we're not too concerned about the mine life and the mineralisation. There's lots of opportunity for mineralisation out there that we believe will support an operation for a long time. But I think this goes to showing that we've had some great success in targeting some of these high-grade extensions of the resource. We've become very efficient with our exploration targeting. The technology available now in geophysics and the amount of knowledge that some of our technical team have built up over 20 years that they've been involved with this project are really starting to pay dividends. We've had similar results at Nebo with some extensions. And as I said, these are broad, thick zones of mineralisation, sort of 50 metres of mineralisation grading, sort of greater than 0.5 nickel, 0.5 copper, usually with some high-grade, massive sulphide mineralisation in there. Key part of the PFS has been the MET program. The metallurgical work done previously was really around risk mitigation, making sure we could produce a saleable product. We've had some great results in the MET, so we've had improvements in the nickel concentrate recovery, in the nickel recovery of about 8%, and in the copper recovery of about 12%, including an increase in the copper grade. For those of you who do any financial modelling on these sorts of things, you know that really the metal recovery is probably the highest sensitivity of the factors you can influence. Usually it's exchange rate, metal price, and then metal recovery. So this is going to have a significant positive impact on the metrics for the project. As I said, a great opportunity for some of that mineralisation we had previously considered as sub-economic to perhaps come into the mine plan. We're also running a range of other studies around looking at how we reduce our CapEx and our OpEx. That's a 100-metre high wind mast, which is about the tallest thing for about 1,000 kilometres out there. It's collecting wind speed data to assist us with our power solution. In the scoping study, we looked at a diesel-solar hybrid. A couple of things are in abundance out in the middle of Australia. That's space, sunlight and wind. So it really gives us a good opportunity to reduce our footprint in terms of our reliance on diesel and to reduce our power costs, which are a significant part of our operating cost out there. There's a range of other sort of innovative initiatives that are underway. Oz Minerals pride themselves as a modern-day miner and a smart miner, and there's a bunch of different innovative programs that are going really fundamentally looking at reducing OpEx and CapEx. So some of the exploration that we've done, as I said, the Sukkot deposit hasn't really been modelled in the development scenario, but we believe there's an opportunity there to add significant mine life. We've done some drilling at Yapsu and One Tree Hill. Just a little bit about the Yapsu prospect, which is quite exciting. It only had a couple of holes put in it before. We redid some ground EM over this target, drilled some holes, probably sort of August this year. Hit about an 80-metre zone of thick sulphide mineralisation, including about a 6.5-metre zone of massive sulphide. The mineralisation is open in all directions, and we're going back and we've drilled a couple of holes with some of those results pending. So the key thing with the exploration strategy that we have is that the metal production is very high in the first sort of 5 to 6 years, and these present some great opportunity for us to identify some high-grade mineralisation to put into the mine plan at about year 6 and really continue to improve the economics of the project. This is the Sukkot copper deposit, which is about, as I said, it's about 15 kilometres away from Nebo Babel. This is the resource outline. You can see that really it's just the lack of drilling with this resource. We have an exploration target on that, sort of closer to 300 million tonnes. We see that as a worst-case scenario, this adds significant mine life at the end of the Nebo Babel deposits. there's opportunities for us to target some zones of higher grade nickel within that deposit. But it gives us great optionality around the development scenario, but also great optionality and exposure to copper. Just on the community, so this project is out in an area where the Indigenous community have determination, so they're an important partner of ours. They're very pro-development of the mine. So actually the first nickel discovery in Australia was made in this area in 1956. That still remains undeveloped. So they're very keen to get something up and running. We have a strong level of engagement with them, and really is the only opportunity for them to have some economic activity out in their land. So the project sort of schedule, as I said, the pre-feasibility study is due for delivery in Q2 next year. I think that really is a key opportunity for the company. Have some transparency around the economics of the project, but also once we hit pre-feasibility stage, there's a lot more visibility and a lot more interest from a lot of the larger investment banks, and a lot of more value will be attributed to the project once it's reached that stage. We're confident that we'll roll straight into the definitive feasibility study. We've allowed 12 months to do that, so that places us at a final investment decision in June 2020. Oz Minerals, our partner, will sole fund the whole study right up into that decision to mine, so Cassini isn't required to put in capital or into that process, and we're very confident that that we'll have some positive decisions along the way and get to that point. So that's really about the West Musgrave project. We've got a couple of other interesting early stage projects that we're doing some work on currently, and the goal is to complement sort of the larger development timeline with some shorter term opportunities for discovery and exploration success. This is close to Perth. It's an asset that's just been underexplored, and we're taking some of the knowledge that we've developed in a similar nickel copper system in the West Musgrave and applying it to this. There's been some good nickel hits. We've actually just done some ground EM in the last week, and we're looking to go and drill that early in the new year. We've also got a gold project, an early stage gold project that's had a little bit of drilling. There's some reasonable numbers, sort of shallow, close to surface, and this is just adjacent to our West Musgrave project. And this is just really to give you a sense that we've got some early stage projects of merit that take small amounts of money to progress, but give us an opportunity and our shareholders some exposure to some upside. So why would you invest in Cassini? Well, we're definitely leveraged to the positive outlook for nickel and copper and the emerging battery metal thematic. There's very few places you can get exposure to such a quality, long life, low-cost asset in a first world jurisdiction. So it's obviously Western Australia is a great place to be doing business. We've de-risked the project significantly by having a very strong joint venture partner. So not only strong from a financial perspective, but also strong from a technical perspective. There's lots of upside still in the project. So it's not just the development asset, that's really just a subset of the project. And I think the other thing that's key for us is being able to communicate a clear funding strategy going forwards. Those discussions are well advanced, and we'd be hoping to be able to communicate that around the delivery of the PFS. The company's goal is to obviously reduce any dilution through an equity raise for the construction capital, and we've got a number of opportunities with how we can do that. So we're confident that we'll get a very good outcome on that basis. So thank you very much.